So I want to welcome Doug Ramshaw. He is president of Minera Alamos and an all-around precious metals expert with 25 years of experience in the field. So we're excited to have him on to hear his outlook on the long-term gold market. Welcome, Doug.
Hi, Elliot. Thanks for having me on today.
Absolutely. Thank you for sharing your time with us. My first question is just, what do you think is in store for gold prices in the years ahead, given the current economic environment?
Yeah, I think what we saw last year, I think what people forget, because COVID has been so much in the headlines, obviously, for the last 9 months, that, gold actually broke out well before we were seeing reports out of China. I mean, we had the breakout in the summer of 2019 in gold when it broke through 1365, and before you knew it, had broken through 14, never really even back tested that old 5-year resistance level. So we had, coming into obviously the terrible situation with the pandemic this year, we had 6 months of really strong tailwinds in gold, and those were there for a reason. And what the pandemic has done it's amplified those conditions that were very ripe for the gold market. And it also accelerated things that were in the system already, the birds that were going to come home to roost. And so, none of that's changed. It's funny that now that we're talking vaccines, which is obviously fantastic, the vaccines will deal with COVID, but you can't vaccinate the stimulus that was the kind of the economic cure or attempt to cure the problems facing the economies as a consequence of COVID. And so, those have probably got even stronger now than they were 18 months ago when we broke out. So I think the outlook's very positive for gold. And I think we're entering what can be a multi-year cycle for gold, which can be very beneficial. And certainly, it's why you want to be in this space. When they come along, you want to take advantage of them.
And the best way I can think of taking advantage of that is buying mining stocks. So what do you think will happen to mining stocks over the period of this long-term bull run in the gold price?
Yeah, so and what we saw when gold started to move is what we always see, which were the gold producers move first. They're the ones who can obviously immediately take advantage of those higher gold prices. And and then there's a trickle down effect. You see some of the gold developers, take advantage of the market seeing, okay, who's going to be the next gold producer. And then for the longest time, you didn't really see much of an uplift in the exploration companies. Now, they can benefit from higher gold prices, but they've also got to have discovery, that's going to reward as well. And so, that's more speculative. But, there's always a trickle-down effect. And, it's certainly this summer we saw, silver finally kind of catch up with the move in gold, and it saw a ripple effect through a slew of silver companies. And gold explorers have, at least off the back of high gold prices, been able to raise capital to see if they can, actually make some discoveries that will give some fundamental justification for higher valuation. So, the gold producers are going to benefit, and they're going to benefit greatly because, we're seeing it in every quarter now. The majors modeled their 5-year business plans based on much lower gold prices than where we are now, $1,400 an ounce. So the kinds of quarters that they're returning now, the cash that they're generating, has been able to clean up the balance sheets. Like the producer balance sheet as a whole has probably not been this clean in I don't know how long. That's obviously great for investors in those companies, and they've seen great returns. But I think it's also, at some stage, it's going to have a knock-on effect to other companies down the food chain, because the one thing about gold production, especially with the biggest companies, they're always having to not just replace reserves, but look at how they can be growth stories still. I mean, it's every year they're mining, whether it's 2 million ounces or 7 million ounces, those have to be replaced. So I think whilst 2020 was the year of cleaning up the books, 2021 is going to be a year where we are going to start seeing M&A. And I think that's a really strong message to investors that, to be a part of this, industry consolidation that happens in every gold cycle. And so I think we'll see a shift, and we've started to see it with certain modest M&A in recent months. And I think as COVID travel restrictions, which can impact due diligence on a transaction, kind of get lifted, we'll see a foray of M&A activity, which is good for the sector because it's, it makes headlines. People love takeouts and mergers, and the growth that comes from those. So that to me is going to be a theme of this year. I'm expecting to see M&A activity increase.
That makes sense given the great positions a lot of these companies are in. So that's really exciting. And just so I know, do you have any idea what the industry average cost to produce an ounce of gold is?
Yeah, the top, I saw a group of, tier one producers the other day, and they're all at that, 1,000 or, 850, 900 up to $1,000 all-in sustaining cost. So the margins they're making are extraordinary right now in an $1,800-$1,900 gold environment. And so, that's, you've seen companies like, Kirkland Lake, returning so much money to investors. And I think that helps with the generalist investors who like to see, capital come back to shareholders in the forms of dividends or buybacks or the like. I think buybacks are inefficient. I prefer to see companies think, well, what can we do with this cash to grow the business? But the amount of cash generation that's gone on has been so extreme that, you don't want to just have it building up on the books. And so it's been returned to shareholders in one form or another. So yeah, very, very healthy margins. We don't need gold prices to go any higher to see consistently, tremendous cash generation. And that ultimately will lead to, I think, some of that M&A activity I was mentioning.
So healthy margins and good balance sheet is just a great recipe for success. So you have your finger on the pulse of this industry probably better than most people. Are you seeing the rise in gold price kind of feed into and excite the miners? Like, are they starting to spend more CapEx? Are they building more? Are they investing more? Or are they still cautious because of the big dip we had in gold?
Well, this year at least, it's been about paying down debt and investing in their existing assets and looking to grow them, or at least sustain them in their current form. And I think that will feed more of, expansionist kind of phase of the industry this year and beyond. But I like it because I think one of the knocks on the industry over the years has been, a pretty major destruction of shareholder equity from doing expensive M&A deals at the wrong time of the cycle. And then those, what we've seen in this year is a lot of the sins of the past have been cleaned up, and I think that's the industry learning and realizing that the investors that have shied away from this sector for a long time, the generalists, have said, no, we expect more. And so, I've seen, you've seen companies which have reinstituted dividends and the like. I think they realize, I like to say from my company, it's like, look, we're producing widgets. They just happen to be made of gold. But, just because they're gold widgets, they shouldn't be treated, your ultimate product, has a cost and it has a sale price, and you want to net a profit. And you want to be in an industry where if your, sale price increases, your shareholders feel that love on the bottom line. And, so I think, I applaud the prudent nature of the majors that are sending a really strong message out there that these are well-run businesses that aren't necessarily going to repeat mistakes, during boom years in commodities in the past, where perhaps there has been too much of an expansionist approach, and make sure that everything on the home front is sorted out first before expanding and embarking on new forays.
I can see how they would be positioning for, like you're saying, a big M&A cycle or expansion in 2021. It makes a lot of sense. While you're here, you're the president of Minera Alamos. I have to ask you about your company because we're always looking for good companies to invest in. So, what are the long-term prospects of Minera, and do you see just a lot of growth?
Well, it's interesting because I kind of talked to that M&A activity. We're in an industry right now where a lot of the merger, the transactional business that's going on has been mergers of equals. And that's, looking at two companies which are the right fit, where we're seeing kind of zero premium deals being struck, where the value is created from those two, a 1+1 = 3 or 1+1 = 4, where the premium really comes from the growth of the two assets or the two companies together. Minera kind of did that itself in 2018. It was a merger, an at-market, zero premium merger of two 25 million market cap companies. One that I ran, Corex Gold, and one that my colleague Darren Kernigan ran called Minera Alamos. And we looked at it and it was like, you know what, if we bang these two things together, we can extract a tremendous amount of value from the combined asset base. And that's what we've done. In the last couple of years, we've grown from a 50 million market cap from the combined companies up to a little over 300 million now. And really just getting started. The business model was to build mines. We're in an industry where I think at the junior end of the sector, we don't build enough. And we have 3 assets in the company. One that is currently being built. We'll see construction end in the next couple of months, potentially construction wrap up sometime late February, and mining to commence. And there's no better way, in my opinion, to play the gold market in the equity side than a company producing gold. And that's every intention that we have, is not just to build at our first mine, but as that one gets built, the cash flow from operation number 1 supports the building of operation number 2, and then the combined cash flow of mines 1 and 2 allows you to build mine number 3. So we're sitting with all the cash we need to build not only the first mine, but the second one thereafter. And so, we're gonna be one of a very few new gold producers coming to market this year. I mean, well, we're on the market, but coming to the industry this year. And it's a very small subset of mining companies that actually make it to being, profitable mining companies. So we're very excited about that. And yeah, we love Mexico. Our team's been down there for 12 years. They've built a number of successful mines, and we do it with great execution, very low capex. And another thing that's very unique to our company, I mean, very few gold producers start out as a gold miner, with no debt, and we're debt free. As I said, with a little over $20 million in cash, which is more than what we need to execute on our business plan. So 2021 is a very exciting year for us. And obviously, the gold market is cooperating. We built this business model in a $1,300 gold market. So just like those majors that are making a ton of money right now, having had a business plan that made sense at $1,300, $1,400, and now reaping the benefits of an extra $400 or $500 of margin, that's kind of similar to us. We stress test mines, so that they make sense at $1,300 gold. And if gold happens to be $1,800, well, our shareholders are going to feel that extra difference in gold price. And that's what we want, our shareholders to benefit greatly from what we're doing.
Wow, that sounds great. So is my understanding correct that you have proven gold in the ground, you have the capital to get it out, and it's just a matter of going through the motions and building the construction to get it out in 2021 and start producing?
Yeah, we should see our first gold production in Q2 of this year. We're basically an operating team. Their passion is building mines. They built 3 mines down there in the last 13 years. We have 3 projects on deck that all will be mines, and we expect to have all 3 built over the next 4 years. First one coming into production this year, in Q2 should be see first gold. The second one, we hope to start construction middle of next year, even towards the end of this year, and have up and running in the second half of 2022, and then a third mine to come on stream after that. So, even if gold was falling or gold was flat, we have a organic growth in our production profile that should mean that we can outperform as a growth producer. You have to remember that the biggest companies in the world in the gold space all started out as smaller companies at one time or another. Kinross Gold was once a 50,000 ounce a year producer. Alamos Gold was once a 30,000 ounce a year producer. Barrick was a modest, had an exceptional start with the Gold Strike discovery in Nevada. But, virtually every big gold company started out as a small gold company. And it's in those early years where you have incredibly exciting growth that is meaningful. Whereas now in their latter stages of life, it's all about just replacing their production rate just to be able to maintain those levels. It's much harder to have organic growth when you're a 6 or 7 million ounce a year gold producer. So, I think we're in the sweet spot for offering outsized returns as a gold producer in a market that seems primed to deliver on at least these kinds of gold prices, if not higher gold prices for the foreseeable future.
What kind of output are you expecting in 2021 and maybe 2022?
Yeah, so our first operation, we're all about scaling up their open pit heap leach operations are very simple modular builds. They're easy to expand with limited, additional capex. So what we pride ourselves in is looking at a project and saying, look, we don't need to know the total amount of gold there. We just need to see enough to get an operation up and running, and then we can expand out of cash flow. We think that's very shareholder friendly. So instead of spending a lot of money and many years drilling out the total resource, here's a 500,000 ounce deposit. Can we see how it can grow to 1.5 million plus ounces? Absolutely. But we'll start an operation up on 500,000 ounces and then grow that resource out of production. And that's what we've done successfully in the past. So, our first mine in year one, it's 25, 30,000 ounces a year. We'll get up to a steady state, 45, 50,000 ounces a year in 2022. We anticipate our second mine will start at about 50 to 60,000 ounces a year. But each of these projects we go after, we want to have the visibility as to, can we take this initial 30 or 40,000 ounce a year operation, or 50 or 60,000 ounce a year operation? Can we see how it can grow to 100,000 ounces a year? Because then you start putting a few of those together, you get a very meaningful production profile. If you can get up to a couple of 100,000 ounces a year, you're talking, a national bank that cover us, the analyst there, he looked at 2 to 240,000 ounce a year producers. And that's certainly our goal, is to get to that level. And the median market cap of those producers was about $1 billion US. So, 4+ times where we are right now. And we haven't stopped just with the asset base we've got. We want to be a growth story. We'd rather be the acquirer of other assets than the acquired, because we think we're building the absolute perfect platform to build a new, very significant gold producer out of our asset base that we've assembled to date.
With that kind of production, do you see a long mine life for the 3 mines? A lot of reserves?
Yeah, I mean, we want to start out with a minimum 7-8 year life, and really, to be able to maintain 9-10 year kind of mine lives. And then as you expand the resource, you can expand the production base without curtailing mine life. So we're not going to try to juice a few years, because no one will, everyone would see through that. So no, it's about sustainability. We want to be around for a long time. That means our project should be around for a long time. And if you go through all the effort of building, permitting and building a mine, you don't want to have to, you make a whole bunch of money off it. But if after 5 or 6 years, you've then got to redeploy that capital elsewhere and go through permitting again and construction again. It makes way more sense to go after the kind of assets where, after the first 5 or 6 years, you've replaced those reserves and you can still be looking at another 6, 7, 8 years life ahead. It makes far more sense to reinvest in your existing asset base rather than look at where are you going to deploy this capital elsewhere. So all our projects have that merit.
Wow, it's hard to argue with. No debt, gold in the ground, cash to get it out, and pretty decent production volume over the next few years. That sounds really exciting. So congratulations.
Oh, thanks, Elliot. It's I'm very lucky. I'm in a position where our operating team are based in Mexico. They work incredibly hard down there. They execute with remarkable precision, and I'm in a very fortunate position to work with such an accomplished team. And in many ways, my job is to tell people their story, because this is their story. This is the operating team down there. They are the brains of the operation, and I'm kind of the Morgan Freeman voiceover of the book that they are writing down there. And it's been an exciting journey to work with them in that regard, and we've got a lot of great things ahead of us.
Sounds like it. So before we get into where people can find you and your work and your online presence, do you have anything else you want to add and share with the audience?
Gold mining has been around for thousands of years, and it will be around for hundreds more. It's funny, I see lots of campaigns out there of mining companies dismissing Bitcoin, and Bitcoin promoters launching drop gold campaigns. There's room in everyone's portfolio for both. Like, you don't have to pick sides here, but I think you'd be silly not to think about the history of gold as opposed to the history of a mathematical algorithm that's been around for a decade. Gold has withstood the test of time, and it will for the foreseeable future. It's a great way to have some exposure to a very exciting sector, but everyone should do thorough due diligence when investing in this sector, because there are good companies and bad companies, and I know that I try to make sure that when we operate as a company, we do everything in a way to be on the good side of the ledger. But the good news is, in the modern day of the internet, and it's very easy for shareholders and investors to double check anything a company is saying. There are so many resources out there. It's really important to do your research on a company and do your research on the people running a company, pulling up financial statements. So a company, has to live up to what it's saying. Like, I know I have to be very accountable for everything that comes out of my mouth, because I'm going to be judged on it. And so I make sure that I try to be as accurate and forthright as possible. So pick up a phone, call companies, ask to speak to management. If management can't get back to you immediately, that's because they're busy. If management still doesn't want to take your call or answer your questions after a week or two, you should start asking yourself the question, why would I put money into a company where I can't even get hold of someone? These are all, pretty simple things, but we at Minera make ourselves, very available. My personal email to me, and personal cell phone number are on the bottom of every press release, because we got nothing to hide. In fact, we welcome shareholder and investor engagement. It's amazing how, in this modern age of text messages and Twitter posts and everything else, that we don't tried and tested picking up a phone and calling someone, asking them the tough questions. We welcome that. So, I think, just be careful out there, because there are lots of stories which are designed around building a stock price, not necessarily building a company. And you can often be on the wrong side of that trade when things fall apart. And right now we're in a very heady precious metal market, so there's probably plenty of time to get in and out of investments. But I personally, I think look at companies that are really trying to build something, and if you have questions, quiz management.
Sounds good. So where can people go to learn more from you?
Well, our company website is mineraalamos.com. From a press release, all our press releases, our presentations, our previous videotaped interviews and presentations at various gold conferences are all up there, and that leaves a track record of what we've said we were going to do in the past and what we've accomplished thereafter, which I think is really important. Watch to see if a company does what they say they're going to do. That should be your first step in any due diligence. And at the bottom of any of those press releases, they can find my email address. It's dramshaw@mineraalamos.com, and also my cell phone number that's there too. I am very busy right now because my wife and I just had twins, and so I'm maybe not able to pick up my phone quite as quickly at times, but leave messages, leave emails. I will absolutely ensure that anyone gets responded to within 48 hours, and welcome any interaction with anyone or any questions anyone has about this industry, because it is a fantastic industry to share in as an investor, as a company guy like myself, and hopefully some of what I said today was of interest to your audience.
This discussion is for informational purposes only. Nothing in this discussion should be taken as investment advice. Guests are not compensated for their appearance. Do not base any investment decisions on the information presented.